What's going on, traders? We're back with another supply and demand trading podcast. This week we're going to be talking about frustration, kind of the week that I had. Were you guys frustrated this week? Let me know in the comments down below how your trading week went, and I'll get back to you. We can talk about it. But anyways, yeah, it's been a pretty frustrating week. Didn't have any winners this week, to be completely honest with you. Like I said, I'm taking advantage of the quarantine and trying to get in the market a lot and just trying to see what works and what doesn't. Been doing a lot of back testing lately and stuff, and it's been kind of frustrating, man. Like supply and demand can definitely be pretty frustrating sometimes, right? Because it's not. I'm starting to realize it's not as simple as I thought. Um, yeah, you want to look for that big strong move and that big strong rally, right? But then a lot of the times you see zones working without that super big strong rally, and sometimes you see zones failing that have that big strong rally, right? It just kind of gets annoying, and then once you finally hit there's a lot more criteria than I mean maybe some of you guys think. There's a lot more criteria in order to take a trade, at least for me, right? Like it's hard. You're waiting for confirmation, and then price moves too far, and now it's a retest in the higher time frame. Now it's a complete retest. Now you can't take that confirmation zone because it's a set and forget now. Like I'm not sure if I'm making any sense. If you need me to break that down for you, just let me know in the comments or send me a message or whatever, and I'll break down kind of what I'm talking about. But it can really test your emotions, man. Like there might be five potential setups in a day, but then the final criteria that's needed to take those setups doesn't come, and then maybe another one comes up, and all that criteria is hit. You place your order, price is coming down. It looks like you're gonna get tagged into the trade. It looks like it's gonna be an awesome trade. Misses you by a couple pips, and then next thing you know, price is taken off without you. Could have been a 4-to-1 trade. You're not in it, and you know what? It just pisses you off. It makes me mad, right? I'm still learning. I'll probably never fully not get mad at that, but obviously it's just part of the game, right? Like you're not gonna hit every trade. Not every trade's gonna work, but it's just kind of frustrating. And I'm seeing the more simple. I'm trying to keep my supply and demand simple and just being like, oh, strong rally, like how everybody learns supply and demand, right? And it just, for me, it just doesn't seem to be working that great. I don't know. Maybe it's because I'm on the smaller time frames. It's the odds aren't great. I know Sam Side said, you can do this on any time frame, but you can do it on any time frame, but the higher time frames, the higher odds, because that's where the banks and the big institutions are playing from, right? And that's why with my day trading, since this quarantine started, I've been taking into consideration the daily time frame and also the weekly. I'm not trading off the weekly. If it's near weekly supply, I'm not gonna not buy on like the 15 minute, right? Like at that point, I don't know if it really matters that much. Might not be a good idea, but it's just a good idea to know where the higher time frames are and where the big money sits, right? So yeah, it's been that kind of week for me, guys. It's just been frustrating, missing trades, hesitating, and basically everything's been going wrong. But I'm gonna keep going. I'm gonna take into consideration other things too, like I know if you guys listen to Sam's side a lot, he says, "Oh, don't do this, don't do that." But I'm starting to realize that maybe there's some shit that he's not saying, or there's some shit behind the scenes that nobody really understands about supply and demand. And one thing I've been taking into consideration is engulfing candles. I one thing that I've been noticing is that whenever there's a demand or supply zone, and the base consists of an engulfing candle, it's usually a pretty strong zone. You should go look on a chart right now and find some engulfing candles. That's a demand zone, not any engulfing candle, but find some supply and demand zones. Find the ones that are in an engulfing candle and let me know in the comments how good they work. They work pretty fucking good, and I'm gonna be taking those into consideration from now on. Whether it's the zone has to be an engulfing, I haven't figured out my complete rule set yet, but I'm going to be starting to do something where I'm only going to take a zone if it's an engulfing candle. That broken engulfing candle, that might be a little hard to get, so it might be I'll take a zone that's not an engulfing candle as long as it has taken out an engulfing candle, Because a lot of the times, guys, the engulfing candles, it's what holds price up. It's pretty crazy. It's something that I've realized. Me and my trading partner have started to realize that. So we're trying to incorporate that into our trading. And I think that it's going to help a lot. I think it's going to maybe filter out a lot of the bad zones and the bad trades. Also, another thing I'm going to be looking out for is traps. If you don't know what traps are, I don't even know if there's a video about it on YouTube. I've just learned from listening to Sam Side videos. Like I'm just saying, I don't know if there's a specific video about traps on YouTube. I might make one. If you want me to make one, let me know. I'm just getting into traps too, so I'm not saying I'm an expert on them or anything. But essentially, what a trap is, at least what I've seen, is you look for an area. It doesn't matter what time frame. And you look for like a pretty clear support and resistance line where there's been several taps, basically where you can pinpoint where the support and resistance traders are going to be trading from. And you look at that, you mark that out, you draw your line with your support and resistance line, and then you find a supply and demand zone either on a smaller time frame or the same time frame below that trap. So basically, they're buying. Let's just say you're support and resistance trader. You're buying at support, where everybody else is. You can see it's been several touches. There's clearly, go look on a chart. You'll be able to find it. Zoom out on the chart. You'll be able to see clear support and resistance lines. So basically, we are placing only if there's a zone below. Basically, you want to find a zone where below the support line, where the support and resistance traders' stop losses will be. Because, banks need liquidity to fill their orders, right? Like, they need people. If the banks want to buy, they are going to find a spot where support and resistance traders' stop losses are, because it's pretty fucking obvious, guys, where their stop loss is. They are going to manipulate price and push it below there, hit everybody's stop loss, because a stop loss, it's not just a stop loss and just some arbitrary word. It's a sell order. You are selling. Therefore, the banks can buy those and then push price up from there. So they're just getting a better deal. And it might not even be that they want to do that, but they kind of have to, right? Like if they have 5 million orders to fill, they know that support and resistance traders are trading this. They can fill that 5 million orders by just hitting those support and resistance traders' stop losses below. And if you notice, guys, a lot of the times the zones, the supply and demand zones, the ones that are kind of more obvious and that have had a lot of trading there in the past, it's a pretty clear support and resistance area. And a lot of the times it'll push below and then it'll tag you out, and then price will push back up. And you're not a support and resistance trader. You just found a demand zone, but the demand zone lines up with that support and resistance area that support and resistance traders are trading. So I'm going to be taking that into consideration a lot. Looking where banks are going to be searching for liquidity. I'm sure it'll help. I've back tested it a little bit yesterday and the day before that, and it worked pretty good. It's not something I'm only going to do. Like, I'm not only going to look for traps because they're not that common. But it's just something I'm always going to consider, right? Like, maybe that'll make me consider always taking the extreme zone instead of the zone that's not at the extreme, because the support and resistance traders are trading the zone, and then their stop losses are going to be at the extreme. So, yeah, that's pretty much it. Maybe this whole podcast wasn't really about frustration, but I mean, I was frustrated this week. Starting to realize that it's not as simple as I thought it was, which is fine, right? Like, that's not going to be super easy. Oh, buy when you see this, sell when you see that. But, I mean, I guess I was kind of sold on supply and demand being, super easy. You don't have to consider fundamentals or anything. But in my opinion, like, fundamentals, they're kind of important, right? Like, if there's a demand zone formed last year, let's just say in the dollar, there's a demand zone formed last year on the daily. And then this year, 365 days later, price comes back into that demand zone. Banks do not have unfilled buy orders there. I don't care what anybody says. Like, I don't think that they do. I don't think that they have orders sitting there for 365 days. I just don't. Maybe they probably do see value there to buy again. That's fair to say. But the fundamentals matter because they might not want to buy there anymore. They might not see the value of buying the dollar at that demand anymore. They might say, I don't want to buy it at 50 cents. I'll buy it at 40 cents though. And if that demand zone lines up with a clear support resistance level, look for that trap, like I said. So fundamentals do matter in this. I think that news does just speed up what was going to happen anyways, if you've ever heard Sam Seiden say that. But the news does matter. It's the fundamentals that drive the market, right? Like, yeah, okay, on the price chart, people are buying and people are selling, and that's what pushes price up, and you should just buy and sell on a retest of that. I agree. Yes, those are the orders, 100%. But longer term, that demand zone might not hold because banks no longer see value of buying down there. They only see value of buying way lower. It might be overvalued at that point. The only exception to this, I think, is supply, in my opinion. This is just completely my opinion. This is just something I've been thinking of. But with supply, if a supply zone was created 1 year ago, price drop from that supply zone, and let's just say banks, I'm just going to use simple numbers. Let's just say there's supply zone at $2. Banks sell all their shit at $2. Price then is trending down. It's around $1. Banks are picking it up at $1, picking it up. Retail traders are trading it. Now it's coming back up to that $2 supply zone. Well, the fundamentals could have changed in that year. And now it could be like, oh, this currency or this stock, whatever it is you're trading, it could be more valuable than that $2 supply zone. So that supply zone might work for a little bit while banks take off profits, right? So that supply zone could be a mark for banks to be like, yeah, I'm going to take off some profits here, but we're going to push this even higher. Or I think it's worth more, so we're not going to be taking off all our profits. So that supply zone might have a reaction, but it's going to push through. That's just my opinion. I don't know. That's what I see happening all the time on the charts, where it just kind of peaks through that supply. Maybe it'll push that back down all the way down to the dollar. You don't know. But that's just something I've been noticing. And the same can work for demand too, right? Like, let's just say there's demand at $1. The banks might be like, we're going to be buying at $1, but we're probably going to push it down and get a bunch of stop losses out at that low and pick some up at 90 cents too or whatever, right? Like, so it's just something to keep in mind. So I've been looking for more fresh zones, fresh as in like created recently. Doesn't have to be the past week, right? Like, but semi recently where banks might have some unfilled buy orders there. If there's a daily demand level, price pushes up, price comes back into that daily demand level in like a week and a half, 2 weeks. I feel like there might be some unfilled buy orders in there, and that demand zone is even stronger in my opinion, from what I understand and what I've seen. I feel like this podcast has gone on long enough. I've kind of just been going on a rant. If you've listened this far, leave a like, leave a comment down below. I'd really appreciate that. Maybe share it with somebody too. I'd really appreciate that. I want this channel to keep going. I know a lot of you guys like the content, and I really appreciate that. So, all right, guys, have a good one.